have that level of frequency and that level of engagement, then typically monetization is almost always the easiest part that you have to solve for. One other thing which is kind of unique to Pratilipi is that about 60% of our audience from demand side is actually women, which is very unheard of in a country like India. Similarly, in terms of highest earning writers, like 39 out of top 40 writers are women, which means that people actually put more effort into creating content on Pratilipi than on typical other platforms. So I think these are two things that kind of separate us.
All right, you're looking to expand into new formats, like I mentioned earlier, animation and vertical drama shows. How do you see these new storytelling formats helping you reach even more diverse audiences, and especially out of India?
Absolutely. So I think one of the big issues that we have had in India and other emerging economies is that our customer acquisition cost is, let's say, half of what you will have in a developed country. Similarly, our content cost is roughly half of what you will find in US. But our ARPUs are actually not half. Our ARPUs are actually 1/5 or 1/6, or in some cases even 1/10. So for that maths to work out, content cost has to go down significantly. Otherwise, that cannot work. So I think with animation, thanks to generative AI tools that are coming up, like that opens up a whole new possibility where suddenly OTT companies can actually be profitable because your content cost is now 90% lower or 95% lower, which was simply not possible without generative AI. As far as short drama app is concerned, that is particularly interesting in a country like India, more so than any other place, simply because it's a mobile native experience. So as of today, India is a country that basically skipped the laptop and desktop generation, right? So a lot of apps were built for that generation, from Netflix to Hotstar to what have you. It's just that people are using those experiences onto the mobile. Versus what we think is now going to be happening is that there would be content which is native to mobile format. Like think of Kindle versus Pratilipi's online literature product. Like Kindle is basically Internet 1.0 versus Pratilipi's Internet 2.0.
All right. I love the analogy that you just gave. But, Ranjit, let's also talk about Pratilipi FM. It has also been scaling rapidly with younger mobile-first audiences. What is the kind of impact you have made so far, and what emerging trends do you see in the space?
Honestly, Pratilipi FM is still relatively small. But like what we see is that a lot of times people sometimes consume content actively, which is where they prefer things like text. Sometimes people prefer consuming content passively, like when you are running, for example, when you're cooking, for example, when you're programming or coding, for example. So the biggest trend that we see is that people want to listen to a story a lot of times after they have actually read it. They again want to listen to it because they want to relive it, but they don't want to invest the same amount of time actively reading it. So it's a pretty funny thing that we are seeing. Similarly, vice versa. People listen to a story on Pratilipi FM. They like their story. They want to know what happens in season 2. So they go back and install the literature app, and then they read that story on literature app. So it's pretty interesting mix that we are seeing.
All right. You've also expanded your content offering across publishing and audio formats through the acquisitions of Westland Books and, IVM Podcasts. How have these two acquisitions worked out for you so far?
Yeah. So our thesis has always been that it's not about standalone businesses. It's basically about once you find a great story, you want that story to travel to as many languages, as many formats, as many geographies as possible. My favorite example is Iron Man. It started as a comic book in US for kids in English. Is Iron Man just a comic book anymore? Is it just for kids anymore? Is it just in US anymore? None of that is true. So our entire thesis has been that can we build that IP ecosystem? Same story goes into a physical book with Westland. Same story goes as a podcast on IVM. Same story goes as comics on Pratilipi Comics. Same story goes as audio on Pratilipi FM. Same story goes on TV shows. Same story goes on OTT shows. Like if you have a great story, why not leverage that story into as many formats, as many languages, and in fact, as many geographies as possible? Like we sit here and we read US writers, right? Like we watch big shows that were made in US. Why should the opposite not happen? Why shouldn't our stories go to US or Germany or France? So that is essentially what we are doing.
All right. You're also looking at global expansion, like I mentioned earlier. Tell us, what geographies are you particularly targeting?
So you're starting with US, and thought process is because US is a pretty deep market and it's also slightly mature market. So which means that there's a bunch of learnings that we can take from people who came before us and then try to apply those learnings. It's possible that we take, let's say, a year to learn US, but once we learn US, then we'll quickly replicate it to everywhere else as well.
All right. And, I also want to talk to you about the future of storytelling. How will it look like, especially in a rapidly evolving digital landscape where formats are continuously changing?
Right. I think two things that are already becoming visible, but they will become even more pronounced going forward. Is one, the cross IP play, something that I keep on talking about, that once you have a successful IP, you want to leverage into so many formats as possible. Otherwise, it's very difficult to make money in media in a single format because content investment has already gone in. ROI now is going to be incremental if you expand into newer formats or newer geographies or newer languages. So one is that multi-modality of different formats, different languages, different geographies. That's one big change. And the second big change is going to be immersive storytelling. So we have like gone from an era of where some people could tell a story to a UGC way where everybody can share a story, but readers still cannot interact with the story. I think we are coming to a point where people are going to be able to interact with the story that you're consuming, whether it's in audio or video or text. Like, I don't know exactly how it would look like, but immersive storytelling is coming very, very soon. And
Okay,
something
now
that I'm excited about.
absolutely. Before I let you go, Ranjit, one final question. Give us the current revenue picture. What are your current business growth numbers like, and what are the targets for the future?
So funnily enough, we did our all hands today. So I can give you March numbers. So in March, we had about 9.5 crores in overall revenue, out of which literature was about 7.5 crores, 7.6 crores.
Oh, okay. And any growth targets for the future? Any revenue growth targets?
Less of targets, more of like, because we lost 2 years where we did not have any money to survive, which means that right now we want to push as much as possible to grow as quickly as possible for the next 3-4 months. So we don't know like till what extent can we grow, but I can give you this idea that year-on-year basis, last financial year versus last financial year, we grew about 70%.
All right, and that's the growth trajectory that you want to keep going on that, and we'll of course be keeping track of all the IPO plans. Ranjit, many thanks for your time, and thank you so much for joining us on Startup Street today.
Of course, thanks a lot for having me. It was a pleasure.
Moving on the hot seat, Green Fortune, a Windows-endorsed startup, closed its $4.5 million funding round, led by Fundamental and with participation from Titan Capital Winners Fund, existing investors Incubate Fund Asia and others. The capital will be used to fuel national-level expansion. Green Fortune, founded in May 2022, is on a mission to revolutionize India's fenestration industry by making premium quality products affordable and accessible. Joining me now to discuss this further is Dilip Kumar, the co-founder of Green Fortune. Dilip, thank you so much for taking time out and being here with us on Startup Street. Green Fortune, like I said, has been focusing on delivering products suited for India's diverse climate, right? Could you share more about how the company designs and develops products tailored to these needs?
Green Fortune is a new age building materials brand. Our focus category is windows and doors, right? So you look at so this category of building materials, what we see is, a problem in the industry wherein customers are looking for better quality products, right? Which are coming from reputed brands, which stand for a certain quality standard and a certain service, which is not available in the market today. Right. So we have over 20 odd designs of windows and doors. We focus on the UPVC range of materials as of today. We go to every customer site, we take the measurements, we customize the windows and doors to their specific sizes. We install it in our factories. We manufacture in our factories and then we install it on their sites.
All right. Dilip, can you sort of give us an idea of the kind of products or solutions that you already have on offer? And, what can we expect from Green Fortune as part of your growth strategy going forward? Any new products on the anvil?
So we broadly define or rather categorize our customers into 4 broad categories. The first and the largest is the individual home builder. So this is where bulk of, India's construction happens. The moderate size houses, the ground plus 1 to ground plus 5 sort of buildings. So that is our large category of customers. Beyond that, we also serve builders, developers, which is, some of the leading builders in Hyderabad and Bangalore and Mumbai that we are serving. We also serve institutions such as schools, colleges, temples, and we also, selectively do government projects where we work with the government contractors and try to complete the projects there. Right. In terms of the products, so today we have the UPVC range of materials, as I mentioned earlier, but going forward, you can expect us to expand the product range beyond UPVC to have the complete range of windows and doors, right? A typical home would require windows made of UPVC or aluminium. So we are going to launch our aluminium range of materials too. Beyond that, we are also looking at launching our range in the door space. This could be, in the steel doors. We're also looking at WPC doors. We're also looking at wooden doors. So that ways, we would be the only company which has a complete range of windows and doors to cater to a particular home without the customer having to go to multiple vendors and trying to reach out to multiple the suppliers or brands to complete their requirement.
Right. So you've outlined what your products are and what you have planned, but you recently closed a $4.5 million funding round led by Fundamental. If you could sort of tell us, how the firm plans to use the funds to accelerate growth.
So the funds would also be going into building a national presence for us. So right now we are mostly based in South India and focused on the South Indian cities. With this funds, we would want to expand nationally, have our offices and our presence around the country. So that's one large, place where the money would be going. Beyond that, we are also looking at building our in-house application, a PartnerGate application, into a full stack solution to improve customer service. Right? So these are the two broad areas that we would be spending our money on beyond the product development, which I just spoke of.
Green Fortune also plans to increase its volume sixfold using these funds, right? How do you plan to scale up production while maintaining quality standards? And also, as I understand, you sort of have production both in India and as well outside. Are you planning on bringing more production into India?
Right. So right now we have production agreements with our manufacturers that we are already in discussions to scale up in the UPVC range. Even on the fabrication facilities, we have a very innovative supply chain model which allows us to scale the capacities very quickly. We work with contract fabricators who are 100% working on our materials, working on our orders, and who have excess capacities. So for us, when we have to expand to a new city, it's about signing up one of these fabricators, working with them to improve their processes and putting our quality control people, right? So that way we are able to scale the volumes quickly without really taking too much time in doing so. It also allows us to keep our costs low while maintaining the quality that the customer wants.
Right. And, you also plan to use the funds to enhance your proprietary tech platform, which is PartnerGate. How will this tech platform evolve into a full stack solution, and what benefits will it bring to your customers? If you could sort of take us through your tech edge.
See, what we have today is a design application and a procurement or a material requirement application. Now we want to build that into a full stack solution for the customer. Now what we mean is so this allows the customer to have complete transparency right from the time they place the order to the time the project is executed. There are several touch points with the customer. So today, what happens with a typical window door supplier is, you place the order and then it's a bit of a black box until someone calls and says that the windows are ready. Sometimes they take up to 45 to 60 days, and that is not a time that you can really wait, when your homes are ready and you want to, get in and do your housewarming. So what we plan to do with this application is give continuous updates to the customer as to, when the order has been confirmed, bring more transparency into the stage of the production, and also give clarity on when the products will be installed at their home. So that way there is more predictability, and there is also, we are also able to reach out to the customer to check, their timelines. That's one thing. Beyond that, the same application can also be used to raise any after sales requests, which will be addressed within a very short span of time. Actually give a full 5-year warranty on our products, which means that during this time the customer can raise the ticket and their issues would be resolved within the SLA.
And Dilip, before I let you go, if you could sort of tell us what your growth targets would be. You aim to achieve 250 crore rupees in ARR within the next 2 years. Are you on track to achieve this, and where will you close this year? What are the targets for 2025?
So we have grown 6 times since doing the seed round in 2023. That's about close to 2 years back. So this year we are looking at a 3x growth, and then the subsequent year another 3x growth, which will take us to a 250 crore run rate. So yes, we are a profitable company at the moment. So we are doing well.
All right, Dilip, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
All right, on that note, it's time for us to head into a short break. But coming up, Small Case bags $50 million in a Series D round led by Elevate. Details when we return. Stay tuned.
Well, and what's brewing today? Wealth tech platform Small Case has raised $50 million in its Well, and what's brewing today? Wealth tech platform Smallcase has raised $50 million in its Series D funding round in a mix of primary and secondary that was led by Elevate Venture Partners with participation from new and existing investors. The Smallcase, which has over 10 million users, is going to use this capital to expand its investment product offerings across asset classes as well as strengthen its relationships with retail investors and ecosystem partners. But to understand how exactly this funding is going to boost Smallcase's growth and what's got the investors to sign this big check, I have with me Vasant Kamath, who's the co-founder and CEO of Smallcase, and Naveen Honaguri, who is the managing director and founding general partner of Elevate Venture Partners. Gentlemen, thank you very much for your time here today on Startup Street. Vasant, I'll start with you. Tell us about this $15 million Series D funding round. What are the immediate priorities when it comes to deployment of this capital?
Thank you so much, Ritu. Good evening. Lovely to be here as always, and thanks for having us. The Series D round is primarily towards two key objectives that we have. One is our customers have loved the small case format. On average, they allocate 1/4 of their portfolios to small cases, a new category of investment products that we've been able to create over the last decade. And we want to expand this to other options. We've intentionally started with, a very tough category of stocks, ETFs, REITs. We want to expand that to more popular options like mutual funds, fixed income, and even underserved categories like global equities and bonds. That's one. And the second one is we built an ecosystem brand with over 250 different market participants. We want to keep growing that. We want to cater to other segments of investors, and working with a new segment of market participants will help us cater to these cohorts of investors as well.
Well, an interesting time to be diversifying. We'll get to that in just a bit. But Naveen, let's get to what got Elevate Venture Partners to lead this $50 million round. What sort of potential do you see in the platform?
Yeah, thank you so much for having me over. We've been following Vasant's journey since 2015. So it's been close to 10 years that we've been following his journey from the sidelines. Eventually chose to plunge into it and participate as the growth story. If you look at, financial services space, one of the biggest moats is inclusion. I think Smallcase, through its tech platform, truly serves for this purpose and truly is democratizing wealth management for the retail individuals. So from a growth perspective, I think the next 4 to 5 years, we continue to see more participation of retail investors into the stock market. And we think Smallcase is at the forefront to help and make this happen through their inclusion of multiple small cases and baskets that they provide.
All right, Vasant, in that case, tell us about these plans that you have to enter or expand into assets like mutual funds, fixed income. How soon are we going to hear more from you on this front, and what's the larger strategy here?
The idea, like I said, is to help our investors design, better financial futures. They can do that by building an entire portfolio, their whole portfolio with small cases, and that's what we want to do. Like you said, it's an interesting time to do this. Retail participation in the capital markets has been growing, and it's not just towards equities. I think if you look at the last 3 years, investors are becoming savvier. They're becoming a lot more educated and literate about how to diversify their portfolios. And that's been, one of the strongest demands for us as well, to basically diversify into these other categories so that we can serve them across their entire portfolio. So that's the reason we're looking to do this. It's purely thanks to customers' love and demand for that.
All right, and we'll hear this as soon as this quarter itself, Vasant. Well, Naveen, before I get to Vasant on this question, what sort of milestones do you expect Smallcase to achieve in the next few years, given that you've put your money on the table?
Yeah, I think beyond the core small case business, what we're fairly excited about is the AMC business, which is about 15 months old. One of the truly India's first passive only AMC. And you've seen large AMCs built out elsewhere in other geographies, right? Like US, China. And if you see some of the numbers there, about 50% of people's investing is in active and 50% is passive. If you would have looked at this stats probably 7-8 years back in India, it was 100% active, 0 passive. Today, about 17% of the corpus deployed is into passive. If not 50-50, we see a strong growth towards more passive alignment.
Well, Vasant, in that case, I mean, we've heard from you when it comes to passive investing, your tie-up with Zerodha, but give us numbers in terms of your targets for AUM growth with all of this, and if there are any other white spaces you're looking to explore in terms of other products.
Sure. So, like Naveen said, the asset management venture is a key part of our strategy for the next decade. The whole idea is to kind of, work on or develop products that are honest, straightforward, and relevant to every portfolio across investors, right? And being an asset manager, I think every asset manager wants to take this target of getting to $1 trillion in assets. So that's something that we want to achieve. Whether we can do that in the next 5 years, 10 years, or 20 years, I think that's how the Indian financialization story is yet to play out, and we'll be big beneficiaries of that. So looking forward to kind of, get to that milestone. That's something that we are working keenly toward.
All right. And we wish you the best with those plans again. Vasant and Naveen, both of you, thank you very much for your time here today on CNBC-TV18.
Thank you.
Thank you so much. Thank you for having me. Thank you.
Moving on, startup founders, especially those involved in deep tech, have reacted to Commerce Minister Piyush Goyal's comments last week at the Startup Mahakumbh. The minister had called on Indian startups to move beyond food delivery and fancy ice creams and focus on deep tech and sectors like semiconductors and AI. The comments from the minister have divided the startup ecosystem. Rachna Dhanrajani is here with more. Rachna?
A blunt Reddit post by a semiconductor founder has sparked a storm in India's startup ecosystem, putting the spotlight firmly back on whether Startup India is truly ready for deep tech. This comes after Commerce Minister Piyush Goyal, speaking at Startup Mahakumbh, questioned why more founders weren't building semiconductors or deep tech products. His comment, meant to inspire, triggered a fiery response instead. And this one is from Vijay Vittal, founder of Dumin Semiconductors and a former Intel chip designer. In a detailed post, self-described as a rant, Vittal said his startup has been designing cutting-edge chips for clients in the US and Europe, including one known as the father of AI. But back home, he says, he's been met with delays, dead ends, and a culture of bureaucratic indifference. From import restrictions and stalled tax incentives to defense officials unwilling to engage, Vittal's message is pointed that India loves talking about semiconductors but does very little to actually support those building them. His post has struck a chord. Echoing the frustration was US-based AI founder Chinmay Singh, who slammed what he called corrupt IAS-led red tape, from delays in payroll to trouble importing MacBooks and issuing pay slips. Singh says the system is broken for anyone trying to build from India. BharatPe co-founder Ashneer Grover also weighed in, saying it's not ministers, but startups that are creating jobs and value, and that politicians need a reality check. But not everyone agrees. Aman Gupta, co-founder of Boat and a judge on Shark Tank India, who was present at the event, defended the minister. He said Goyal's intent was not to belittle founders, but to push them to aim higher and benchmark against the best globally. In a long post on X, Gupta said, "What we have built is incredible, but what we can build is far greater," calling for more investments in LLMs, climate tech, infrastructure, and innovation stacks. Ola founder Bhavish Agarwal, too, backed Goyal's call for introspection, asking why India's startup scene is still focused largely on consumer tech. There's so much more to build. AI, drugs, rockets, EUV machines, new materials, he wrote on X. Amid the firestorm, the Commerce Minister has announced a new helpline for startups along with fresh funding initiatives for deep tech and seed stage ventures, signaling that the government is listening. But the fault lines are clear between what the government wants from the startup ecosystem and what the ecosystem needs from the government. Whether this moment of friction sparks real reform or just fades as another flash in startups debates in India remains to be seen.
Well, thank you, Rachna, for those details. Appreciate you joining us. And with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.